If you buy a disability insurance policy, if there's one piece of advice to take away from this episode, it is this: make sure it's current. That means much more than making sure the premiums are paid up. And my guest today is going to fill in all the blanks on what this means. This is one you're really going to want to listen to. I'm Carl White, principal at Market Advisory Group, which is a healthcare marketing agency, and I'm also the host of Practice Care. The mission for both is the same, and that's to help private practice owners stay private. Care is usually better when the provider owns the practice because they get to make all the decisions, clinical and otherwise, that they think is best for the patients. It's just not always the same when somebody else owns the practice. Usually, eventually, their agenda starts to creep into the provider's ears, more for the provider to think about. Let's just keep it all simple and keep it private. My guest today is Drew Powers. Drew is the founder of Powers Financial Group, which is a registered investment advisor. He specializes in advanced insurance and investment strategies for doctors. Drew is 100% independent, which means he doesn't work with any investment or insurance company, and that means he's able to give unbiased advice that is most beneficial for his clients. Drew started his career in 2001 as a market maker on the Chicago Board Options Exchange, where he managed trading portfolios comprising of hundreds of equity and equity index options listings. In 2008, he transitioned to the role of financial advisor and investment advisor representative, where he helped clients develop individual financial strategies. At Powers Financial Group, Drew leverages his stock and options trading expertise with his financial advising experience to help clients increase and protect their wealth. You do need both. Drew lives in Naperville, Illinois with his wife and their two kids. He's an avid downhill skier, active in youth sports, a proud Rooster within the Naperville Jaycees, and is passionate about CrossFit and the Paleo/Primal Lifestyle. Man, that's a whole episode right there. Drew, thank you for coming on Practice Care.
Thanks for having me, Carl. You're calling me out on the CrossFit and Paleo and Primal as it might have
I just
fallen by
take the
the
bio I'm
wayside since
provided,
the
my friend.
pandemic.
Yeah, right. With a lot of time on our hands. All I do is read what I'm given. So disability insurance and investment advising along with Paleo lifestyle. One day we'll have to figure out how those two pieces of the puzzle fit into one. But today we'll just focus on one side. We're going to get into disability insurance. Listeners, this might sound like a 3-minute topic. It's not. There's more than meets the eye. This is a big deal if you have disability insurance. It's a big deal maybe if you don't, but you should. So please listen in. But first, Drew, there's a pretty healthy bio. Nevertheless, there's more to your life and your story. So fill in the gaps. Help us get to know you a bit better.
Yeah, well, I think you covered it pretty well. I think if I'm going to hammer anything home, it's just like your listeners. I'm completely independent. I do not work for an investment company or an insurance company. So I'm free to find what's best for our clients, in the marketplace and provide them with the best solutions. And perhaps maybe another differentiator is that, I have expertise in both insurance and investments. And so, a little bit more of one-stop shop, so to speak, for our clients.
Right. Good. Okay. So we're talking disability insurance, and let's just start with basic kind of brass tacks. So what does disability insurance provide?
Right. So I think disability insurance, first of all, might be the worst named product ever.
Every industry's got theirs. Yes.
Yes. I mean, this is really paycheck insurance. This is meant to give you an income should you become too sick or injured to work. And, furthermore, maybe even just work to your full capacity. So the attempt here, what the insurance is attempting to do is to make you whole financially if you can't work either altogether or just, in a partial way.
Right. I remember a friend of mine was telling me about it. I have a disability insurance policy, and I was a little bit confused. And he said, let me explain it to you this way, Carl. When my wife realized it, here's how she said it to me. You mean you could fall off the roof and you're worth more to me dead than alive? So if you don't die, which is this horrible, morbid thing to realize, that's right, because I had life insurance policy, but you have to die to claim it. And, I had no disability. So if I fall off the roof metaphorically, but don't die, too bad for me, unless there's some sort of insurance to cover it or some other way. This is the insurance way. And that's where disability insurance comes in. So we're all kind of level headed. Paycheck insurance makes a lot more sense. That makes a
Sure,
lot more sense.
sure. And to your example, a lot of times if I were to say Dr. Smith became disabled, the
Mhm.
image in your head is fell off the ladder,
Right.
right? Wheelchair, body cast. But really the vast majority of disability claims are illnesses.
Mm.
And especially progressive diseases, things that start off as just a nuisance
Hmm.
and then grow into something that keeps you from practicing.
Right. Or you think about, maybe this is a bad, you'll tell me if this is a bad example. I don't know. You're a surgeon and you just wreck your hand doing I don't know what for six
Sure,
months. That
right.
would, yeah. So it could be a
Yeah,
short-term disability, it could be a longer-term disability, shorter medium, whatever the definitions are. But something that says I can't do the job that pays me
right.
over
Exactly.
over some period of time. Okay. So what is keeping your disability insurance policy current? What does that really mean? Feels like there's more
Right.
than meets the eye.
Yeah. So what that really means is we want to keep an accurate, record. How much money are you earning?
Hmm.
And if you were disabled and could not practice that same way
Hmm.
tomorrow, right? How much disability insurance are you going to receive? How much benefit are you going to receive?
Hmm.
It's very easy with all insurance policies, and I'm guilty of this myself in certain ways. Like, when's the last time I looked at my homeowner's insurance? I
Same.
have no idea.
Getting ready for this episode, I was like, I probably ought to look at all this stuff.
Yeah, right, right. So it's this thing, right? You sign up for it. You used to get a big bound policy. Now you get a PDF,
Hmm.
and it probably went into the file cabinet or the desk drawer. And when's the last time you really looked at this
Hmm.
and just double checked?
Hmm.
And so what we want to make sure is that, um, I think a lot of our clients, if you're earning $100,000, you're living on $100,000. If you're earning $1 million, you're living on $1 million. We want to
Hmm.
make sure that if you are disabled and can't practice,
Hmm.
you have income that comes from your policy
Yeah.
and keeps your income as
Hmm.
close to where it was before disability.
Yeah. And if you want to go lower, do some math and figure that out. And, time will
Right,
tell. But
right.
yeah, yeah. When I get my annual policy, like this statement, I get a couple. One says, hey, a couple months before, this is what you got to renewals. And it's nice because they say, and here's the monthly benefit.
Mhm.
And I could just compare that to my income and go, yeah, okay. It's pretty easy. It's not the thick bound whatever with the,
Yeah, right,
maybe you
right,
can understand what all that says. I cannot. Um,
right.
yeah.
But like, you're actually looking at that.
Hmm.
A lot of folks don't. And it's
Yeah.
understandable. We're all busy and we're getting 40 pieces of mail every day,
True.
and most of it is junk.
Yeah.
And sometimes that insurance annual review,
Yeah.
ends up in the junk pile
Yeah.
when it should have been more closely reviewed.
Yeah. Yeah. I remember, and then a few years ago, I was paying for it through my business pre-tax. But
Mhm,
then I learned, it was kind of obvious when I said it, was like, well, if I were to, because I was paying for a pre-tax, the benefits, should I ever collect them, would be taxed because they
mhm.
haven't been taxed yet. So I switched it. Now I pay for it after tax, which means the benefits would be also no longer taxed because I paid the premium with after tax. So no little thing to think of. They each have their pros and cons. So what drives the need for somebody to update their disability insurance?
Yeah, I'm going to say it's going to be income,
Hmm.
and it's maybe also a change in your employment status.
Okay.
So, for our listeners who already own their own practice,
Hmm.
you probably aren't looking at a change in status anytime soon.
Right.
But for our listeners who are W-2 employees of a bigger entity and they are thinking of making the move to independence, they're probably going to leave behind a whole suite of benefits that bigger
Oh,
hospital or
yeah.
clinic or something is providing that they now have to, replicate on their own as best they can.
That's true. I remember when I worked in corporate, yeah, disability insurance, it was
Right?
such a great, it was a
Yeah.
negligible number from what I remember. Not so anymore out here in,
Yeah.
ownership land, but whatever.
Sure.
But it's a good
Sure.
point. You walk away from a lot of stuff, you don't even realize it.
Hmm. Yeah.
Okay.
Yeah. And then also just year to year increases in income.
Hmm.
I'd hate to see somebody who had, I mean, I hate to see anybody get disabled. Let's start with that first,
Yeah.
but
Yeah.
you'd really hate to see them have grown tremendously over the last 4 or 5 years,
Hmm.
get disabled at that point, and have a benefit that reflects their income from 4 to 5 years ago.
Right.
All right. It's certainly not making them whole. And while it
Hmm.
helps, they could have had a benefit there that solved more of their problems instead of just maybe patching a few of them
Right.
up.
Is it an option with with some policies to get like an automatic kind of increase if you want to try to sort of approximate? Nobody really knows what the future holds, but that might make things easier if you got like, I don't know, 3 or 4%. Can you do that?
Yes. And so this is a separate, so there are two ways to, or maybe we'll say three ways to increase the benefits on your
Okay.
policy.
Hmm.
So the first one, what you're talking about, a
Hmm.
lot of companies for a number of years have had this automatic increase.
Hmm.
It was just built in and it would go, your policy would grow by 3, 4, 5%
Hmm.
every year for the first 5 or 6 years.
Hmm.
And it was nice because, the hardest thing for a new doctor is to get their benefits to match their rapidly rising income.
Right.
So it was a nice little way to keep it going, but sometimes people confuse that with the second one, which is really what we really want to focus on, and that's a future insurability option, a guaranteed insurability option. This is another downfall of disability insurance. Every carrier has the same features and benefits, and they all call it something else. And they
It's
all put their
awesome.
own little unique twist on the rider. The basic definition is that you have the right in a disability policy to purchase more coverage based solely on your income. So you never have to answer another medical question.
Hmm.
But as your income goes up, you just say, hey, here's my tax returns. Here's my new employment contract.
Hmm.
Here's, whatever. Here's
Hmm.
my proof of income. I'd like to buy more coverage.
Okay.
And they don't ask you any medical questions. Why is this important? This is important because, as you know, we all could have a million little dings,
Yeah.
injuries, illnesses, things that don't necessarily keep us from working at the moment,
Hmm.
but might make the insurance companies say, Carl, Drew, you guys aren't really a good risk for us
Yeah,
anymore.
actually, now that you mention it, why don't they? I'm glad they don't. But, so you qualify at age 28 and at age 68, you
Right.
could still, huh.
Yeah. Yeah. And then the third way, of course, is to go through full underwriting again. So go,
Hmm.
fill out a whole new application,
Hmm.
answer the medical questions. We're getting
Hmm.
farther and farther away from the days of having to do blood and urine and that mini physical, but
Okay.
sometimes you still have to do that what they call a paramedical exam.
Okay.
Those are the three ways. So to further complicate it, some carriers recently moved to this constant 3%. It's endlessly complicated.
Okay.
And that's why, too, it's not maybe enough. I love it that you're opening up the mail and looking at the benefit and seeing if it matches up.
Hmm.
But also love it if you took it a step further and called somebody and said, hey, what's available to me on this
Hmm.
policy? What am I about to lose as I get older and some of these benefits might fall off?
Hmm.
So maybe taking it that next step.
Okay. Okay. Um, More homework.
Yeah, right.
Check all
Exactly.
more
Exactly.
homework. The true purpose of practice care. Something you said, I wanted to maybe take half a step back. You said before we started recording, there's different definitions of disability. Um,
Sure.
and sometimes
Yeah.
people get a little tripped up or, false sense of security. Just help us. What are they and what are the misnomers when it comes to disability insurance and how should we think about it? Because it sounds like it's pretty prevalent.
Yeah. So on your individually owned disability insurance policy, I'm going to guess that 90% of our doctor clients have what's called true own occupation. And it's basically if due to illness or injury, you can't practice the way you did, the day before that illness or injury,
Sure.
then you're disabled in some way,
Hmm.
right? And so the language is, the substantial and material duties of your occupation, right? They're all going to adjudicate the claim in basically the same way. They're going to look exactly at what you were doing to earn money,
Mm-hmm.
right down to the insurance billing codes, if that's, applicable to your case, and say, okay, here's what kind of time and duties and income you're missing, and here's how much we're going to pay you. So that's
Mm-hmm.
the most robust definition.
Okay.
That's the old, I use my hands in some kind of a surgical or hands-on patient care. I
Mm-hmm.
slammed it in the car door.
Right.
I can't use my hand. I can't hold on to my instruments. All right. Carl and Drew are not disabled from our jobs. We can sit here and
Yeah.
it's a hassle, but we're
Yeah.
not disabled.
Yeah.
Our doctor clients are disabled.
Yeah.
So we think of this, and this is maybe what they're most familiar with. So for our clients, they're thinking about this true own occupation definition of disability.
Mm-hmm.
And in their group plans, this is their employer sponsored plans,
Mm-hmm.
group long-term disability. You might get that definition, your own occupation, for say 24 months.
Mm-hmm.
And then the definition moves to any occupation that your education and training would qualify you for. So it becomes suddenly broader.
That sounds
Now
like a
it's
good
okay.
thing.
Well, what it does is it says, okay, I slam my hand in the car door.
Mm-hmm.
I can't practice the way I used to practice. And now 2 years later, they say, well, you still know a lot about your profession. You could get some other job
Oh,
in
it's a
it. So
bad
we're going
thing.
to stop paying you,
That's a bad thing.
right? It
Okay.
becomes a more broad definition. And then, um, most of our listeners are still dealing with student loans, I'm
Mm-hmm.
sure.
Mm-hmm.
The final, the worst definition is the Social Security definition of disability.
Okay.
And this has nothing to do with your own occupation or really any occupation. And I'm going to look away from the camera here because I've got it on my notes. It's the
Yeah.
inability to engage in substantial gainful activity. That's basically
Anything.
any occupation, right? Has to have lasted or is expected to last for more than 12 months or is expected to result in death. So
12
those are our
months.
definitions, right?
It's a
So
long time. Yeah.
yeah. So when somebody says, "Oh, well, if I were disabled, my student loan is forgiven." Probably not.
Mm-hmm.
It's very difficult to meet that Social Security definition.
Yeah. So that's the definition that student loan
Right. They're going to
providers
follow the
use.
Social Security. Correct.
Yeah. A year. Good Lord.
Yeah. Yeah. And I even think I'm not going to scroll down too much onto this page here, but
Yeah.
I think it gets worse. Most people who apply for Social Security disability do not get it.
Probably.
Yeah.
Probably. Yeah. Okay. Does everyone need disability insurance or does everyone need it at all phases of their, like how do you think this
Yeah.
through?
So, for our doctor clients, especially when they're young, all of their income potential is just that, it's potential.
Mm-hmm.
And so you've spent all of these years and time and money in
Mm-hmm.
undergrad, med school, training,
Yeah.
dental school, whatever the case may be.
Mm-hmm.
And you're about to enter practice and you are now, with all of your education and training, you're a 10, 20, 30, 40, $50 million asset, right? Your ability to earn an income is a
Yeah.
huge asset.
Yeah.
I would want to ensure that.
Mm-hmm.
So I think when you're getting started,
Yeah.
I recommend to everybody while they're in training, buy as much insurance, and that doesn't have to be current, right? You'd have a small policy with a big future purchase option,
Okay.
but get as much potential income as the insurance company will give you.
Mm-hmm.
Take the maximum amount they will issue you now.
Mm-hmm.
Because if you got disabled early in your career, you want this check, and this is the only check from disability insurance, right? This is the only check you're ever going to get. You
Mm-hmm.
want it to be as big as possible.
Mm-hmm.
Then earn money,
Mm-hmm.
save money, build up your retirement accounts, pay
Mm-hmm.
down your mortgage, pay down your practice note, pay off your
Mm-hmm.
student loans.
Mm-hmm.
You might get to the point where you say, hey, if I were disabled today, I'd probably just I've already got the plans in place. I'd probably just sell this practice
Hmm.
and I would retire anyway. Well, then at that point, what are you don't need the
Yeah.
insurance.
Yeah.
And in between, your first day of practice and your last day of practice,
Yeah.
we can evaluate it in there to build it up and then slowly, maybe decrease it or make some of the definitions a little looser and
Hmm.
save money on the premium along the way.
Yeah. So you're kind of following, the arc of your income potential as it climbs and then as it sort of either flatlines or dissipates or whatever, and just covering it, appropriately.
Right, right,
Okay. Okay.
exactly.
Yeah. And I guess whether this is relevant or not, the younger you do it, the easier it is to qualify, right? I mean,
I mean,
the
all
health,
things being equal,
the
you're
healthier you
probably
are.
as young and as healthy today as you're ever going to be. So,
I can't argue with the first part of that.
yeah, right, right.
I'm as young as I'll ever be. Healthy. I don't know what I hope for there. Okay. Um, anything else like, we're, we've covered a fair amount of ground and not a lot of time. It's
Mhm.
kind of a factual thing, but it's one of these things that's more than meets the eye. Anything you think we should touch on that we haven't, or that I should have asked you but didn't?
Sure. Well, a couple of things. One, just some simple things. Sometimes our clients think, well, I have one policy, and they said that they wouldn't issue me any more benefit based on my income, so I guess I'm fully covered.
Hmm.
All these different carriers have different formulas for how much they will give you. So if you're trying to purchase more and one carrier won't give it to you, you can always get coverage from a second, third, fourth carrier. There's really no limit to
Oh,
how many different policies you have. They're all going to coordinate to pay you a maximum at some point.
okay. And do they look at each other? Say, well, if your maximum insurability is 500,000 and you get 300 from this from them,
Right. Yes.
so
Yes.
the second carrier would top out at 200 or
Exactly. Right.
thereabouts, whatever their
Right.
comp.
Yes. Right.
Okay.
Right. They're going to coordinate with each other.
Okay.
But all the time, we see that one carrier isn't offering anymore for whatever reason,
Hmm.
and another carrier would. Or
Right.
maybe you've gotten to the point where you've got, there's really five main carriers that are, policies and financial strength that are suitable for physicians, surgeons, dentists.
Okay.
Um, you know, let's say you have two of those policies and they're totally maxed out.
Hmm.
Well, there's other now excess line carriers like Lloyd's of London, where if you're making $1 million a year,
Hmm.
we can get you a whole lot of benefit
Okay.
from another carrier. We can also, if you're the practice owner, we can create a carve out for just the providers, the healthcare providers
Okay.
in your practice that is going to closely mirror your individual disability definitions,
Hmm.
but is going to run through your practice and be a group policy.
Right.
So we've got ways to add coverage as your income goes up. Don't think that just because you heard one no or you've
Mhm.
maxed out one policy that you have to be done.
Yeah. Yeah. So there's like two
Yeah.
lessons in there for me. One is get different quotes, compare.
Mhm.
Number one. And number two, whoever you choose to work with, make them an independent person like, Drew or someone who's truly independent, because if they're, I don't know, Northwestern Mutual Life or whatever, that's all they're going to be able to show you. That's their job. That's fine. But, you know, have options. Options in life are good.
Right, right. And
Yeah.
then maybe one last tip
Hmm.
for the listener who is currently a W-2 employee or 1099 independent contractor, with contractual earnings, who are thinking about making the jump and owning their own practice.
Hmm.
All right. While you are still a W-2 employee or 1099 contractor with a contract, a guaranteed income, max out your individual benefits now,
Hmm.
because the minute you become a practice owner, the insurance companies are going to say, "Oh, you're no longer an employee with
Hmm.
somebody else with a history
Hmm.
of earnings that we can look back on. Now you're a brand new entity, and we want to see 2 or 3 years of profitability before we give you any more benefit."
Got it.
And so you could be making a whole lot of money right out of the gate
Yeah.
and not be covered.
Wow. Okay. Okay. Cool. All right. And then the other question I like to ask every guest is if someone is they're listening to you, they're like, I think he's onto something. I'm not sure. Maybe I should. They're enthusiastic about it, but they just don't know where to start. Where should
Mhm.
they start?
Give me a call, give me an email. I am happy to review what you have.
Hmm.
I've been looking at these contracts for close to 20 years. And so, I mean, with a quick review, we can dig into what you have, what
Okay.
kind of discounts are built in, what kind of future purchase options are available to you.
Yeah.
And to the extent we need to dig around more, like I said, I'm completely independent. So I'm able to service those policies
Yeah.
and, actually help you get through the paperwork and the process of making whatever change we decide, you want to make.
Right. The lovely, highly simple, intuitive process of applying for insurance.
Right, exactly.
Exactly. Exactly. Um, and I'll just say, there's a healthy cadre of people out there who say, oh, in one way that wouldn't happen to me. What do I have to worry about? Um, it is true. Any one of these is rather unlikely for any individual, but and nobody ever really wants to use insurance that they own. Who
Right,
wants to? I don't hope that a tree falls on my roof so I can make a home insurance claim just so I feel like I got my money's worth out of. No, but if you slammed your hand in the car door and couldn't work for 4 months, that'd be a different kind of painful. And so
right.
that's the point of all this is that for these sudden situations that are painful, that's why you do this. So kind of get over it. It's your choice, but get over it. So Drew, I appreciate you coming on Practice Care. We're going to have you on more this year here in 2025. Um, you're one of the few people I know who can actually talk about these things in a plain language, understandable way, which is really valuable. So I appreciate it. Thanks for your time. Thanks for coming on Practice Care.
Thank you so much for having me, Carl. Can't wait for the next
Absolutely.
one.
Yeah, exactly. And Drew provided contact information. So we're going to get them into the show notes of this episode. So anyone who wants to contact Drew, you've got another way to do it. A couple of points before we wrap up. First, if you're someone like Drew or I, you serve private practice owners, or if you're a private practice owner yourself, either way, if you've got some experience or expertise on the business side of private practice, we want you to come on Practice Care so that you can tell the world about it. At the show notes for Drew's episode and every episode, there's a link, a couple of questions. It's super quick and easy. Just tell us what you're thinking about, and we'll get you scheduled as soon as we can. And finally, you got to subscribe to Practice Care. It's one word, Practice Care. We're everywhere, Apple, Spotify, YouTube, every player you could think of. We drop a new episode every week. And the easiest way, far and away, to stay up to date with all those is to subscribe. Thanks very much. And until next time.